Hello, Brett Ellis with the Ellis team at Keller Williams down here in sunny Southwest Florida. And we've got an update for you today. It's Tuesday. That means it's the Ellis team current market index. And guess what? The number stayed exactly the same, 3.42. So we've had 2 weeks at 3.42, and 3 weeks ago or 2 weeks ago it was at 3.43. So that's 3 indexes in a row that we are pretty much even. So I wanted to kind of go behind the scenes because I thought there might be a little bit of movement, and I thought it might go up just a little bit, but it didn't. So what we're seeing here is, it's leveled off. But what I wanted to do is go back to the previous end of March, April, and what we saw in 25 was it started to rise. And then let's look at February, March, April, right around April here, April 30th. It stayed even for about a month, and then it started to rise. And even if we go back to 2023, it was right about here. It stayed even for a month or two till about end of April, and then it started to rise. So I wouldn't be surprised if it levels off here for a week or two and maybe starts to rise again. That looks like that's the normal, and that's fine. What we're really saying is this number here is below last year, and maybe it's a little bit higher. It is a little bit higher because we were around 3 back in 24. But for the last year or so, we are below last year's numbers. That means we're probably in for a better market than we were in 25. And 25 was starting to get better. Will it be as good as 24 or as 23 or as 22? No, we're not saying that. We were on a path to having almost like an accelerating market. And then we saw a backup in oil prices, a backup in interest rates. We've got this Iran war. There's a lot of uncertainty out there. We don't know how that's going to affect inflation. So we got some wild cards that we're dealing with here. We were on a nice path, just like we have been in other times, leveling off, and then we're going to have to wait and see how the war, oil prices, inflation, interest rates, how that affects us. The good news is today, Tuesday, March 31st, interest rates are coming back down just a little bit. Oil's up about $1 or $2 last time I checked it. And the Iran war, who knows where we are with that. Maybe by the end of this week or next week we'll get some news. I think there's a lot of posturing, a lot of negotiating out loud. When I say out loud, I mean out in the open. Like talking to our NATO partners, talking to Iran, talking to China, talking to Russia. A lot of these things are sending messages, but it's hard to decipher what they mean. And if Wall Street has a hard time deciphering, if the bond market has a hard time deciphering, it's no wonder Main Street would have a hard time deciphering. So we're just going to have to let it all play out. So far, I've not heard buyers question one thing about it. Will that hold? Will that continue? I guess that depends on how long this whole thing lasts. But for right now, the numbers are solid. In fact, they're probably a little bit more solid than I thought they'd be. We don't make the market. We just report the market. And as of March 31st, 2026, we're still showing some pretty darn good numbers. So stay tuned. Tomorrow, we're going to release our luxury market index. And on Friday, we're going to release the market spread index. And we'll see how that number holds up as well. That'll be a telltale sign as well. So stay tuned for those.
The Ellis team at Keller Williams is a family affair. Always call the Ellis team. They'll handle you with care.